Welcome back, everyone. The pandemic served as a launchpad for a lot of startups worldwide. We saw a surge in the numbers, and it truly fueled the belief that pandemic caused the businesses to double up. Bringing in yet another relevant conversation, please welcome Darshan Bathija, CEO and co-founder Vauld, Varun Khurana, founder and Crofarm, Optify, Vinay Dalal, CEO and co-founder TalBrum, and Puja Bothra, senior content lead ETHRWorld as the session moderator. Also, do not forget that there is a leaderboard that is active, so keep engaging and keep winning. Over to the panel.
Hello, viewers. Welcome to this exclusive session with startup founders. India has emerged as the third largest startup ecosystem in the world after US and China, and the pace of growth is no way slowing down. With research pointing last year, India added 3 unicorns per month. A startup is called a unicorn when it is privately owned and it is valued at over 1 billion US dollars. Understandably, every startup founder harbors the dream of making a unicorn startup. Today, we have with us founders from the startup sector, and I'm delighted to welcome them to this event. We have with us Darshan Bathija, CEO and co-founder, Vauld. Varun Khurana, founder, Crofarm and Otipy. Vinay Dalal, CEO and co-founder, TalBrum. Firstly, thank you so much for joining us in this session. We call this session How to Start Up and Scale Your Business. I'm sure the audience will find this conversation very insightful and motivating. After all, most of us are entrepreneurs at heart. And I'm sure a lot of people amidst this audience must be sitting with some great ideas about starting startups. So please make the most of this session and do share your questions using the chat tab. Varun, I'd like to go first to you. You have an app called Otipy that promises to deliver farm fresh produce to home. My question to you is, what led you to start this business? Did you see an opportunity that was missing to date?
Sure. Thank you, Puja, for inviting me. So I guess the idea kind of came, and I'll just give a brief background. So this is at the time when I was the chief technology officer of Grofers. So Grofers, as you know, is a grocery delivery company, and it does fruits and vegetables also. So once I left Grofers and I spent some time at the farm gate, because see, at Grofers, we would normally procure from the mandis or the wholesale markets, as you call them, and we would deliver to consumers. And in the case of fruits and vegetables specifically, it's a very tough category. And what makes this product very different from all the others is that it degrades every hour. So that is what makes it tough to store, tough to manage, tough to deliver. It's delicate also. So after leaving Grofers, when I spent some time at the farm gate and just learned through the process that farmers used to grow. So I just thought that actually the gap was pretty huge when you look at in terms of what farmers grow and what consumers expect. So simple examples, right? So, and I'll take the example of a commodity as simple as cauliflower. So, typically you would expect a farmer when he's growing cauliflower. So the expectation is ki the bigger the size of the cauliflower, the more price it will fetch for him, because typically these commodities are sold in kgs. But now if you look at it from a consumer standpoint, right? So what is happening these days is that the family sizes are going smaller. So typically, when you pick up a piece of cauliflower, you typically pick a piece which is enough ki for my family of 4 people, it serves that, and then you would not want a piece bigger than that and cause wastage in the fridge, for example. And which is why, as a consumer, I would probably even be willing to pay a premium for that size because that's appropriate for me and my family. So this is just one example of a disconnect where what is being grown and what people want. So there is a gap. So that is one. Second thing also was that in this supply chain, what we also saw, and specifically in the case of fruits and vegetables, is the price markup, and in terms of what farmers are selling at and what consumers are buying at, it's pretty huge. And the general rule of thumb is the more perishable a commodity, the more price markup is there. So for example, if a farmer is selling spinach, the same spinach, when you buy as a consumer, the price markup may be 4 times, 5 times. But if we talk about commodities like potatoes and onions, which are less perishable, the price markup will be 2-3 times. And if we go further down the chain, like pulses, so 1.5-2 times. And the reason behind this is wastage, because the more perishable a commodity, the more wastage it incurs over the supply chain, and which is why the intermediaries have to charge as much to make sure that they don't end up making a loss on it. So so that was the other thing we realized, that the wastage in this supply chain is so big, because of which there's so much price markups, that if we were able to even make a small dent in that, for a country like India, where obviously we have enough number of people below the poverty line, and if we are able to make even a small dent, then the impact could be huge. So we could save food wastage, we could give better or fresher produce to consumers at a cheaper price by saving on the wastages. So those were, I would say, some of the key motivations that basically motivated us or enticed me into starting this company.
Very interesting, Varun. And I think this company was started at the right time. So this happened last year during lockdown, and at least that's the time when I got to know about Otipy, and I am a consumer of Otipy, and I use it, almost like 3 to 4 times a week. And now that you mentioned cauliflower, I must also say now in most places, cauliflower is not sold with relation to the weight. It's sold in pieces. So there is like, per piece. And it makes sense now in nuclear families, size is not such a big thing. Going to Darshan on a very, very different tangent, jumping from talking about cauliflowers, we are going to talk about cryptocurrency. And itself, it's a very, very heavy name. And, it has a kind of kick attached to it. So Darshan started this company, startup called Vauld in 2018. And he's built it as a banking system for crypto. Going to you, Darshan, how was 2021 for cryptocurrency in India is the first question. And do you think the ecosystem has come of age?
Thanks so much for the question, and it's a pleasure to be here. It's very important to understand that cryptocurrencies is about 13 years old in total, and it's amassed a market capitalization of $3 trillion. Now, to put that number in context, it in 2021 crossed the market capitalization of silver. Now, that is just absolutely massive, but it's only day one for us. It's still relatively early. The next milestone that the crypto space is excited about crossing is crossing the market capitalization of gold, which is at $13 trillion. So we basically need to 4x from here to cross the market capitalization of gold, which I think is not too far off. 2021 in particular saw a couple of very strong tailwinds carry the crypto space to the mainstream. One was the increased acceptance of decentralized finance. We had roughly 25 million global customers of cryptocurrencies in 2017, touched 100 million global customers in 2020. 2021 saw the space double in terms of users. So we're looking at total 200 million customers, roughly 10% of that in India. So India is absolutely critical, a huge contributing factor towards the growth in the last 1 year. Another tailwind that we saw was the increased acceptance and commercialization of NFTs. Now, we saw football and other sport sports come in and start issuing NFTs. We saw bands come in and start issuing NFTs. We saw the creator economy, both in terms of art, of physical art, as well as audio, come in and create NFTs. And it has absolutely exploded. The good thing is for each of these tailwinds to be capitalized by the Indian customer, they had to go through regulated, fully compliant platforms such as Vault. So we were a large benefactor of the same. Now, 2021 also saw another interesting trend, which is in significant investment to drop the intellectual barrier of entry. Now, crypto may seem daunting if you haven't dabbled with it in the past, and it's promising to do a lot. So that learning curve could be particularly challenging. Companies such as ourselves have significantly invested in reducing that barrier. And I think over a 3 to 4 year timeline, it's going to be ubiquitous. So yes, we had a stellar 2021, and we're very bullish on 2022. And to answer your second question, I think the cryptocurrency space is coming of age. It's not there yet. And I think there are a couple of contributing factors that could get us there. One is clarity around regulation, which I'm bullish on to see in 2022. We had a couple of scares early 2021 where it was seeming likely that there would be a full-fledged ban again. Thankfully, that did not come to fruit. Towards the end of 2021, we had a scare in November where we were likely to see quite stringent regulation. I think the government has done absolutely the right thing. They didn't want to rush into over-regulate the space. They're taking their time to ensure that they're not killing innovation in the country, and also such that they want to structure this such that the upside of the space is also captured for the customer, for the end person. And in turn, this could contribute to a significant revenue stream and growth trajectory for the economy. So 2022 is just going to be really exciting for us.
That's great, Darshan. And it looks like, you're just ready to fly now. So, all the groundwork has really happened in 2021. And there is actually a lot of awareness about crypto. Like you talked about 10% from India. I'm sure this number is going to increase. Now let's move to a sector which is a comfort zone for me, HR tech. And HR tech as a sector has definitely come of age. In fact, it's seeing two-digit growth since last 2 to 3 years. So my question to Vinay is, why is HR tech the next sunrise sector for startups in India?
Yeah, hi everybody, and thank you, Puja, thank you, ET, for giving this opportunity. Now, you remember this old, when we said consumerism is booming, so middle class was the reason. And when we say consumerism is booming, even Apple, Facebook, Snapchats of the world look at India numbers for their growth and, for their stock to appreciate in the stock market. So the same thing is applying here. Where the HR tech industry is remove those consumers to MSME. Now the entire growth engine, whether it is India, whether it is a large part of Africa, whether it is UAE, whether it is Southeast Asia, what happens in India, probably the HR tech industry would be able to replicate in other countries because culturally, work culture-wise, they seem to be similar. And therefore, as an investor, I may get a multi-X returns on whatever investment that I've done. So is HR tech a sunrise industry? Yes and no. Yes, because yes, of course, it is growing, and each one of us who has been, who was there at the right place at the right time, just like Zoom was at the right place at the right time. So if we were there, and if you had a stable product, even as a startup, if you had a stable product, you would grow. But we have to remember that this growth is driven by certain aspects that have happened, like AI, ML, AR, VR, all this technological impact, which have impacted first fintech, of course, healthcare, would now probably impact HR. So COVID has, of course, anytime you'll talk to HR, if I were to remember 2008 as a point wherein all of a sudden the HR value proposition decreased and you were never close to that center table where all the significant things of the organization were happening. COVID has really changed it, but it has changed for good for people who are agile and who have design thinking solutions. So traditional HR, and we'll handle this at some other point, traditional HR is losing its relevance to technology. And what has COVID brought in? COVID has brought in a hybrid model. When I say hybrid model, we were absolutely sure that the only way to go to was a physical in-person meeting. In COVID, there was absolutely no way in-person was happening, and completely work from home was happening. But there's an irreversible change, and that's the hybrid model. Even after this small scare would go away, or it would go away in whatever number of months, but eventually what would stay back is a hybrid model. So we have changed irreversibly, and irreversible is the word. You cannot now differentiate by saying that he's working from home, so he cannot be appraised properly. No, that is not going to work from an HR perspective. You would have to tune up any change that has to be brought in an organization. It is people who bring the change, and HR happens to be that catalyst. So COVID-19 has actually led to a paradigm shift in the HR function. If I talk of hiring, if I talk of induction, if I talk of training, if I talk of grooming, if I talk of assessment, any people related function, massive shift. So it could be remote or a hybrid working model, or HR tech would remain untapped and it would be used and there's a lot of investment coming by. So you would find a change and a requirement of change in talent acquisition and talent retention, in adapting to hybrid workplace as a HR tech solutions have to be provided. You would be hearing a lot about resignations and how the market was overheated last few months, specifically in IT sector, where because of e-commerce and all other booms, this boom was coming by. Of course, declining mental health and well-being would be another factor, which we all know burnout is happening. And we have been giving a massive mess on diversity, equity, and inclusion in India. Worldwide, it is catching a theme. Worldwide culture is becoming important, and we'll have to catch up here in India as well as Southeast Asia. Another important point, there is skill gap, and there's a digital skill gap. Now that has to be absolutely, it has to be brought into control, and HR would have a reasonable amount of HR tech at its disposal to make that happen. Leadership challenges would always remain. Any change, there'll be two kinds of leader: people who respond or adapt to change, and people who are slightly behind. So we have seen that in 2008 in organizations, even in IT sector in India, some organizations who were leader at that point in time, all of a sudden, say you'll find a TCS zooming ahead of others in results and everything, because they responded to 2008 differently. So something like this, leadership challenge would always be there. And when it is remote, sustaining connect with your people is important. So that is there. The entire learning environment, because of artificial, the AR and VR, artificial intelligence, augmented reality, virtual reality, the entire scenario is changing. You would have just like you have microclimates, you'll have micro learning opportunities, and you'll have to cater to that. And you need a
Yes, so a lot has actually started happening, and very valid points there, Vinay. And I totally agree that some of these changes are absolutely irreversible. So in an organization where you've moved to HR tech and you've automated your processes, there is no way you will go back. And also agree to the fact that, when you talk about sunrise startup sector, the first is fintech, second is health tech, and then comes HR tech. And in India, HR tech really, it's still in its nascent stage. There is still a lot of potential, and there is still, a mind shift change that is required amidst leaders to kind of, expedite their transformation. So very diverse and interesting perspectives from all the founders. There is still a lot more to talk about. You've taken a big leap by starting a new venture. Your product has a potential to disrupt the ecosystem and get you enough traction. What is the next step you think about? Is it revenue as you plan to grow, or do you think more about scaling in terms of size and market share? Either way, you need to invest to expand your business and increase the customer base. To that point of scaling your startup, my question to you first, Varun, is What are the characteristics of the top performers in your sector? How would you define success for your startup?
So I would say, coming to the first part of what you mentioned, Puja. So see the scaling piece of it, I think there is a lot of talk about scale, and I think India as a country is also very exciting because of, just the sheer number of people that we have, and and the scale of the country, right, for all practical purposes. But I think, a lot of times the other problem is that, earlier, I would say, pre this whole funding boom, so, capital was not as readily available. So scaling was tough. But if you look at, today's times, so I think capital availability is higher. In fact, I was speaking with one of my friends who's based out of the US, and he was like, the funding that you're attracting in India is even more than what startups are attracting in the US, which was so capital availability, I think, is largely solved, at least to a good degree. But I think from a startups perspective, one of the things that a lot of us entrepreneurs we often forget is that premature scaling is also a bad idea when you're as they say, your product market fit is not established. You think about scaling, and you're you're scaling something which fundamentally is not a viable proposition, either in terms of the cost or just from a consumer value perspective. So I think that is something to be borne in mind when we talk about scaling. Now, coming to your other questions, Puja. So in terms of the sector that we are in, see, we are a fruits and vegetable service provider, OTP, through a community group buying model, where we have community leaders or resellers, as we call them, and they service consumers in their areas, where we bring freshly sourced supplies to them and they further service the consumers. Now, in this sector, I would say, see, in fresh, by and large, the problem historically has been is that, if I talk about the offline world, it is normally people who pick and choose and then they buy. Now, this is an option which becomes difficult in the e-commerce world when you're on an app and you only really get to see the product once it arrives. So I think from that perspective, while a lot of companies have been trying to solve this, including big baskets and grofers and so on and so forth, but I think it has largely been difficult because most of their supply chains have been designed for grocery and less perishable items, and not necessarily for fresh. The way some of these have tried to solve it is by leveraging cold chains. Now, the thing about cold chains in India is that, see, by and large in India, we don't have cold chain. Everything moves under ambient temperature only. And which is why people, there is this perception also that, actually there are two things. One, people like to, consume fresh stuff because, a lot of people have come from villages, and, even today a bulk of our population is there only and is into farming. So, the people are kind of used to that freshness, and agar wo, if it comes through a cold or chilled infrastructure, so sometimes that perception is also there ki fresh nahi hai, right? So that also is there. So some of the players in the e-commerce industry have tried to solve it with that, but then again, I think fundamental problem remains is that people's expectation is different from fresh produce, and conventionally supply chains are designed ki they'll stock produce and then you'll order and then you'll get it. But if you stock it, then it is degrading, and by the time it reaches, the quality is not what you would expect. So I would say in the fruits and vegetables segment, see, by and large, though it's still a very, very large unsolved problem. So if you really ask me, have we really solved it or has anyone solved it? No, I don't think so. See, this is a 150 to $200 billion market, just fruits and vegetables alone. And if I talk about players or organized players, they're doing like decimals percentage. So is this solved? It's not solved. And then what would it take to solve it? I think it would it'll require a lot of out of the box thinking. Like, the way we think about it is that our supply chain is designed for speed so that the degradation that happens along the way should be minimal. We take orders even before the produce is harvested. So I would say these are some of the things that we do. With this, we are able to at least serve 3-4 lakh consumers out of NCR, doing 14,000-15,000 orders every day, move about 80 to 100 tons of produce every day. So we have reached a certain level, but have we also cracked it? I would say it's we have started.
Yeah.
So we haven't really
It's going to take time to develop because it's something that just started, I think, maybe 5-6 years back or 7 years back, probably. And pandemic has given it a great push. But by the time, everyone's habit has changed and you can have a lot more people using internet to, buy. It's going to take time, but definitely there is a lot of growth potential. Um, I think competition can be a healthy impetus in evolving ecosystem like cryptocurrency. Competition pushes you to be innovative, focused, and persevering. After all, every business in your niche will be scrambling to have bigger slice of the pie. To that point, Darshan, my question to you is: firstly, what motivated you to start your company, and secondly, who are your biggest competitors, and how do you differentiate yourself from them?
I deeply care about finance because I come from 3 generations of business. As a business family, and I come from dinner table conversations around investing and what we could do to tweak the business to make things better. I have a formal education in engineering, and it took me about 2.5 years to transition back to enter the financial space. It took me about 6 months to get out. I realized there's just fundamental problems in the way capital is structured and deployed in India, not just India, in private equity in general. And I saw a lack of incentive alignment between where the capital is going versus what I wanted capital to do. I always saw capital as an influencer of positive change, drives the needle forward, enables more than anything else. And yeah, I just didn't see that. So wanted to play a part as part of the challenger as opposed to be a part of the incumbents. And in 2016, I tried to transact with Bitcoin in India. I couldn't do it. I noticed that most platforms in the country and even internationally were trying to drive speculative behavior as opposed to drive mid to long term saving or even explore the payment aspects of cryptocurrencies. So with that thesis in mind, decided to start Vault, where we first wanted to ensure that we're trying to accrue wealth over the medium to long term, as opposed to speculate on the newest coin of the month. And to that end, we started 3.5 years ago with an interest-bearing platform where we pay interest to customer deposits, and on the other end, we facilitate a line of credit. We bridge that. We created that credit market in this side of the world from scratch and keep a percentage of the transaction. We do have competition, and it's, as you rightly mentioned, competition typically drives costs down, ensures that entrepreneurs are at the edge of things and continue to innovate on behalf of the customer. We have 2 primary crypto yield competitors in the US, both roughly worth anywhere between $4 to $5 billion, and one out of Europe. We're the only ones in India doing so at the moment, and we're really excited about the growth we've seen here. Over the medium to long term, we think traditional exchanges are going to offer crypto services. We think traditional financial companies are going to offer crypto services. So think of your more traditional investment apps. As long as this transitions to becoming more and more part of the mainstream, they're going to want to offer it because the demand is undeniably there. The hunger for the asset class is already validated. Now it's a question of whether the crypto companies are going to compete with the finance companies and beat them, or are the finance companies going to leverage their stronghold and gain a larger percentage of the market with regards to the crypto companies that are relatively new. And the way we think of it is really simple. We want to be an enabler of the space, which is why we have APIs for the same. Now, if there's a traditional financial company that wants to offer crypto services, we know it takes anywhere between 2 to 2.5 years to do right. We went through that journey. There's just a significant amount of R&D, significant amount of testing, significant amount of security, because security of crypto is paramount. I mean, once a platform is compromised, the funds are gone forever, right? No reversible transactions like the traditional financial world. So we've done that. We've done so in a very established manner, and we want to reduce the barrier for financial products to offer crypto services. And as opposed to trying to capture a bigger piece of the pie, crypto is in a very fortunate place where the pie is growing so large that as long as you can capitalize on creating some sort of niche for yourself, you will essentially build a very defensible business over the medium to long term, and that's what we're doing. So a combination of yield as well as trying to be very friendly to the incumbents of the investment class assets and platforms, and we're very excited about our position in the market.
Very interesting, Darshan. Vinay, going to you, I'd like to ask you, what is your future roadmap with respect to TalBrum's growth and scaling, and how do you see, the HR industry evolving to adapt more technologies?
Yeah. So, Puja, I'll tell you one thing. I remember 2008. 2008 was a year. I don't know how many of you were probably professionally active then. I had seen what happened and the bloodbath that happened in the industry that I was associated with as HR head in certain organization. So, you know what? 2008, when we came out of the crisis, the superhero was actually the CFO of the organization. COVID has brought in CHROs as superheroes. And I will always request, all my colleagues who were even freshers when, say, 2005, 2006, when they were freshers, now they are national HR heads and around the network, I always tell them, don't push yourself to obsolescence. This is the time, this is your time. You are a superhero, make use of it. Technology would help you do it. I'll give you a simple example of Moderna. Moderna, the one that created COVID vaccination. Now, what did they do? Pre-COVID is what they defined them post-COVID. So you know what, they were on the cloud space. They had a drug design studio on the cloud. All engineers and scientists were on cloud. They were pulling data from cloud extensively. They were using AI ML simulations, and they had shared tech for smart and speedy production. And bingo, in 42 days, well more than its weight, it brought out a vaccination, and rest is history. Biggies of pharma couldn't do it, but Moderna could do it. They could present the credentials for phase 1 trial in 42 days, and look where they are now today. So cloud somewhere helped them do it. I would also request all my HR colleagues, whosoever are part of the session or are listening to the session, adopt cloud, adopt agility, adopt this change, or the way things are, you would be pushed into obsolescence if you do not use technology today. Technology is as basic as engagement. So what we learned during our classical times of hire, train, retire, sustain, you need to have technology inbuilt, and that is going to hold you in good stead. It is not about freshers doing it or youngsters doing it. It is you who's required to do it. Of course, you have expertise. Of course, it goes without saying. All these years in the industry, you have your expertise. But down below, something is changing fundamentally. The AI and ML integration and the interaction and the available data that is there in public is changing HR absolutely fundamentally. So you could be an expert, but the components which make you an expert, somewhere the data is changing it. Somewhere the predictive modeling is changing it. Somewhere the analytics is changing it. And therefore, let's not move to voluntary retirement, embrace HR tech for surviving and thriving. And cloud would be your oil. If data is oil, interconnectivity is required, silos cannot work. And for interconnectivity, cloud would be your solution. So you cannot
Yes, cloud is the new fuel, I totally agree, Vinay. So we have come to the end of our discussion today, but I just want to take one very brief point from all of you. Varun, quickly, can you tell me some people challenge that you faced at OTP? Any one people challenge, because we are an HR platform and it'll be interesting to know that from you.
Well, I would say challenges that we were able to overcome. So I think specifically during the COVID days, as Vinay was mentioning, I think see what happens is that your touch with your people goes for a toss for all practical purposes. People become more like resources who are sitting at some corner of the world, and they're just getting your jobs done for you, more like a resource. And I think at that point, what happens is that, when that cultural connect kind of goes away and the relationship becomes very transactional. So at that point, you see things like attrition and resignations, etc., that, a lot of companies are seeing. So I think, those are problems which will need to be solved as, the world does more and more of work from home. We don't do as much of it. I'm in office right now.
Sure.
But yeah, I think, those are problems which, we were able to overcome.
Hmm.
And I think the cost of attrition is very high because when people go and new people come just learning, and by the time they become productive, not to mention the cost of
Yes.
hiring someone is also very high.
These
So
have been perpetual problems, more so with the startup, high attrition. And of course, cost of hiring is high. Since we've got less time, I'll just very
thank
quickly
you.
go around the table. Vinay, what would you say when Varun says that, there is a problem of touch, the human touch? Do you think technology can replace that human touch? One brief statement from you.
Uh, See, human touch cannot go away. And if technology was a pointer, Walkman, we always hear Akio Morita's statement, then Walkman would not have come. There was a human touch to it. He saw it somewhere, people jogging and knowing the problem. So Walkman came into picture. Human touch can never be replaced. AI, ML would finally lead to an expertise which would make human touch better. HR tech can only make human touch better. It is there to aid, it cannot replace.
Very rightly said. Darshan, one last point on you. What would you leave the audience with when I ask you, one strategy that helped you bring your business or your startup to where it is today? It has grown, and one strategy that has really helped you.
Yeah, I think when we started COVID when we were 8 people, we're over 100 people right now, and we have over 200 open positions, which we intend to fill over the coming 6 months. So our organization has looked completely different through basically almost completely working remotely. There were folks that we've been working with for over a year that we hadn't met even once in person, and it was a challenge. Uh, I know how to do culture in an early stage company when people are around, and the COVID has taught the whole organization how to onboard and grow the firm relatively quickly, and ensure that if you aren't able to deliver that kind of personalized experience through the onboarding process, uh, through the recruitment experience and the like, leveraging technology was a benefactor, but that human element of ensuring that we were physically around and in turn could easily correspond with to get people to buy into the vision and feel like they're part of this organization just as much as you are was a challenge and something that we thankfully overcome. And what I would like to leave companies working towards innovating in 2022 and beyond is while people may be functional experts, what makes what people end up remembering over the medium to long term is how they felt working for an organization. And you cannot go wrong investing on that because good culture is an outcome in itself. It has nothing to do with the business, but it has everything to do with satisfaction. So
Yes,
you
and that
cannot
with
invest enough.
that, yes, with that statement, I think we come to an end of this very interesting session. Thank you, viewers, for staying tuned here. I'm totally amazed at the confidence, commitment, and perseverance that my speakers in this panel have displayed. These founders are all set to kill complexity, create space for innovation, and fast track work that matters to scale the businesses and take it to the next level. Thank you so much, Varun, Vinay, and Darshan, for joining us today at Next Tech.
Thanks for the
Thank you very
opportunity.
much. Thanks
Thank
for
you.
having me.
Thank you so much, Darshan, Varun, Vinay, and Puja. This was surely an exciting conversation. Lots to take away. So thank you. Thank you so much.